Welcome to Divorce Mortgage Strategies, brought to you by the Divorce Lending Association, where clarity meets strategy in the financial side of divorce. Whether you're a family law professional, a financial expert, or someone navigating the complexities of divorce yourself, this podcast is your go-to resource for trusted insight into how real property and mortgage financing intersect with divorce outcomes. We don't just talk about houses. We talk about strategic solutions that protect futures. Let's dive in. Today, we welcome host, certified divorce lending professional, Stacey Ellison, and her guest, certified divorce financial analyst, Jayeeta Choudhury.
All right. My name's Stacey Ellison. I'm a certified divorce lending professional with the Divorce Lending Association. It's my distinct honor and privilege to have Jayeeta Choudhury with us today. Jayeeta is an amazing certified divorce financial analyst and certified divorce financial planner. She specializes in working with particularly women going through a divorce. We met initially at a networking women in business networking group with the Atlantic Highlands Chamber of Commerce about 3 years ago, and I've had the pleasure of working with you and networking with you since, and consider you a dear friend. But let's start. Give me a little bit of a background about yourself, your practice. How did you get started in financial planning and being a CDFA, and what inspired you?
So I'm a third generation immigrant and a proud American. So I use my life experiences and my planning skills to help my clients build, grow, and protect their wealth and ultimately transfer their wealth to the next generation and their assets. So my passion is helping women. Being a woman, I realized that women around me are sometimes struggle when they're going through life transition, especially divorce, death of the spouse, job changes. So that's what really triggered my interest in becoming a CDFA and a financial planner. So I would be getting a lot of my women clients coming to me who were going through divorce, painful divorces, and did not know where the money was or how to manage their finances. So that's really where it triggered my interest. And I went and got my CDFA license because I thought, I would like to have those acronyms next to my name if I'm going to have my client. And being a financial planner, I have been doing that for over 2 decades, more than 2 decades, actually. I am with Rivers and Wealth Partners, which is a full-service wealth management firm here in Westline, New Jersey. We have over 150 years of experience among all of us in this field. Our goal is really our clients on their financial goals, their legacy, and their retirement. That's what we focus on. Goals. It could be going through a divorce, and then after the divorce, what happened? How are they going to invest their money, or what do they need to do at that point of time? I try to, again, I don't have a crystal ball. I try to plan for. So that's what I do. Thank you for having me.
Oh, my pleasure. Okay. So with clients going through a divorce or a major life transition, how do you help them feel more confident about financial decisions when they may have not had to make these decisions at all or by themselves in the past? How do you give them the confidence to move forward and the education that they need in order to make those decisions?
So you mentioned education, right? I want them to know, I want them to understand what it all means, which means I do sit down with them with their statement, go through their statement, figure out what they have. And sometimes it could be something very simple like how to balance their checkbook, how to look into their bank account and figure out what are the different payments they're making. Sometimes they don't even know that. I always plan them to pull their credit, figure out their credit report to figure out what are the liabilities their name is on. Because sometimes they have no clue if they have a loan or a mortgage, and you see it all the time, I'm sure, right?
Yeah, I
You're
do.
the same profession as I am, and you are the credit specialist, right? Who I go to all the time. Sometimes they don't have a clue on what their finances look like. So I start with the basics. Start with, sometimes I just assume they don't know anything. I have to educate them through the way.
Right. And I love how you hold everybody's hand, even if it's as simple as they don't know where to go to open a checking account. Here's some options, and here's what you tell them what they need to look out for, and really hold their hand on all aspects of gaining financial independence. And I love that.
And you see that also. I mean, sometimes it's also not about financial. Sometimes it's just listening to them, what
True.
their warriors, right? Just sitting there and letting a ear, and you then figure out where they need help.
Right. So what kind of professional partners help you when it comes to supporting your clients?
So you and I both know you have been an integral part of my business. I always reach out to you when I have a client and I know that there's going to be a house that is going to come into the mix. So you play a big part, or they're either planning to buy another home. Can they afford it? Can they afford to keep their current home? But it plays a big part. Most of the time, these clients come to me who live in big homes here in Monmouth County, especially, right? Most of the time, not always. You are an integral part. Second is, of course, having an attorney or a mediator. We have a few that we work with together. Attorneys, mediators play a big part. I always say I'm not an attorney. You do need an attorney or a mediator, and you have to figure out what works for you, which is the best route for you, right? Mediation, or do you need an attorney? You need an attorney, you are a spouse of another attorney. So right now, those are the first two. And then you know what, realtor coming to the next. You can then talk about having a realtor in case if they need to sell their home or buy another home. So those are like you play a big part and attorneys play a big part whenever I go and look for my partner.
Awesome. And when you're talking to clients about support and designing income and figuring out income post-divorce, how do you structure support design to satisfy these stability and continuance tests that are going to be looked at by underwriting, for say, but without giving legal advice? That's a very important line to walk. We all want to stay in our lanes while still giving excellent advice to our clients. How do you handle that from your side?
So first of all, I make sure they know that I cannot give them legal advice. I'm not qualified to do that, right? So when they come to me, I do a financial plan based on their current situation, right? And then I add like if they decide to keep the home, how is it going to affect them? And of course, I then go to you and get your input on that. And then look at if they're going to sell their home and get their equity and then decide to buy another home, how is it going to fit in their expenses? So cash flow planning is a huge part when it comes to divorce. You're going from two income, sometimes two income to one income. How is it going to affect your cash flow, right? Sometimes some of these spouses do not work. So they are dependent on alimony that they're receiving or kind of sometimes they're buyout. So they're different. So every time they go to the negotiating table and come back to me and say, hey, this is what is being offered to me. I have to run a plan and figure out if that's going to be beneficial for my client or not. So it's all cash flow planning and financial planning. Yes.
Awesome. Awesome. And what red flags, what jumps out to you when you're sitting down with a client going through your process? What are the red flags that you see that you need to make sure get addressed from your side?
So when you say that, red flag is when the other spouse, right? And without taking names, I'll give you a couple of examples. One is I had a client whose spouse was a business owner. So in paper, their income was very low. But most of the expenses were being by the business.
Mm-hmm.
So I would definitely then suggest having a forensic accountant being part of the mix. I'm not an accountant again. So I would of course suggest that. That is one that comes up all the time. The other is, as I told you, like I had another client who pulled out her credit and realized there are personal loans in her name that she had no idea of.
Oh my gosh. Wow.
So that's the reason I always say I look at liabilities, and I'm sure you do too.
Mm-hmm.
I look at their life. That's the first thing I look at. I look at their income tax return. I ask them to send me the income tax return, and I ask them to put their credit report to see how their credit, what is in that report.
Mhm.
So those are two red flags they always look out for over
Wow.
time.
And if you've got someone who's looking, and I'm sure people say that, if you've got a client who's has a house and they want to keep the house and they're like, oh, I'll just assume the loan. I'm just going to, we'll just take my husband off the loan. Right. How do you handle that? The idea of the assumption versus an equity buyout to keep the house and how that factors in.
That's a great question, actually, because that's one I'm facing. And being that mortgage range was so low in the bank, most of these clients going through divorce have a mortgage at like 2.5. I mean, unheard of rate.
Yes.
So
Can't
for
get that
them to
today.
go, I mean, right, you didn't all the time. So when for them to go from a 2.75 to whatever the rate is, the payments are almost nothing. That is the first discussion. And sometimes they say, I can assume that no. You can assume that loan, but then how do you take your husband off of that loan? Right? Who has been paying that mortgage? You or your husband? Has it been coming out of a joint account? So that's when I always say, okay, let's talk to a market specialist. And that's where basically you come in and I will reach out to you and say, hey, Stacey, this is the scenario. Do you think this will work? Or do you think we should look into equity buyout? What do you suggest? I would not be the person giving that advice. I tell them that I've had my specialist, and this case, the Stacey Ellison is my specialist. Let me have Stacey come in and let's speak to her together and see what she thinks. So yeah, we do get that. I'm sure you're getting it a lot.
Oh, with where interest rates
Yeah.
are today, no doubt. My curiosity is from your standpoint, what numbers in that equation versus the equity buyout versus the refinance, what numbers matter most to you in terms of the advice that you're going to give to somebody?
Cash flow.
Cash flow.
Is that going to help them or not? I take into account, let's say you keep the same mortgage. This is the payment. What are the other expenses? What are the taxes, property taxes, insurance? How much does it take to maintain your home? You cannot go and cut the grass. I mean, maybe your would-be ex was cutting the grass. Who is going to cut the grass now? So you do need to figure out all this. Sometimes people do not realize the total expenses of maintaining a home,
Yes,
right?
that's true. That's true.
No.
I actually had a case recently where she wanted to assume the loan because it was a 2.5% interest rate versus today's rate, but she had been in the house for 20 years. So from a cash flow standpoint, even with a higher interest rate, because the loan balance was much lower, she would save a lot of money by doing a refinance, even taking that change in interest rates into account. So that's always an interesting conversation to have with someone because they're like, oh, I don't want to let go of my 2.5% rate.
Yeah.
But
That's a great point. It also depends on the amount of mortgage left.
yes,
So that could make a huge difference. As you said, cash flow at the end of the day, cash flow is what matters.
cash flow
It
is
is going to, that's the keyword, cash flow, right?
gotcha. Do you have any other, thoughts or recommendations, like when you first meet with someone and they're talking about going down this path of divorce and figuring out all of their finances? What's the most important piece of information that you want them to walk away with after their initial consultation with you?
I want them to walk away with knowing that I cannot just be the only person helping them. They need to surround themselves with professionals, depending on what they need. Right? So I would say when they walk out after meeting me, they have a better understanding of what their finances or what they need to go and look for at this point. The first meeting is, of course, about like what they're going through, what they expect, a background of them. So when they walk out, they need to know that, okay, this is a list of documents, a list of things I need to go look for. They walk out with a list of names that they need to reach out to surround themselves with the professionals they need to have around them. It could be, as you said, it could be a therapist. It could be a therapist. Sometimes they do need therapy. I mean, going through what they're going through, emotional,
Oh, sure.
right? Not going through that. So we might need a meet therapy. They will need an attorney or a mediator, right? Depending on how they want to address this divorce, how do they want to go about it? They might need or may need a mortgage person like you to figure it out for them. Can they stay in their home? Most of the time when it's a woman, they say they want to stay in their home, in this home because of the kids. The kids are still in school, they want to stay back. So I do always give them three names from each of the job family and have them leave my office with those names and a list of documents they need to gather.
So they're prepared.
Yeah.
That's wonderful. Okay. Thank you so much for doing this with me. Where can someone who might benefit from your expertise go to learn more about you?
So we have, if you go to rawp.com, riversidewealthpartners.com, and just type in rewp.com. If you go there, you have all the information there. I am considered the divorce specialist in the group. So please go in and you will have all the resources on your fingertips.
Wonderful. And do you have one final thought that you would like to leave with us today?
I would love to, yeah. I always try to tell my clients when they are going through a divorce, it's never easy. It's very difficult. They had planned for a night, which they were planning to spend together, and suddenly that plan is disrupted, and they have to have a new plan. That's how they should look at it. Instead of getting intimidated, it does not matter. It can be done in a very smooth manner. So there's a new plan. It's not easy, I know that. But I would like to be there for them, hold their hand through every step, and make sure that they are able to reach their goal.
Awesome. And I know that you do that with your heart open and kindness and your expertise, and you would be an amazing partner to have going through that journey if needed. So thank you.
Thank you. And I would like to say this to you also, because I have reached out to you a few times, and you have had very honest opinions saying that I don't think they either is work. I think they either this is how it needs to be done. So I do thank you for being my partner.
My pleasure. All right. Well, again, Jayeeta Choudhury, thank you very much.
Thanks for joining us on Divorce Mortgage Strategies, powered by the Divorce Lending Association. If today's conversation brought you clarity, insight, or inspiration, we encourage you to subscribe and share this episode with others in your circle. For more resources, or to connect with a certified divorce lending professional in your area, visit divorcelendingassociation.com. And be sure to download the free Divorce Strategy Hub mobile app for tools, education, and support designed to guide you through the financial side of divorce. Until next time, remember, in divorce, the mortgage isn't the problem, it's the plan.